Happy Friday once again. Sitting on the treadmill, going to talk about S Corps today. Big question, big piece of our business here is really how the S Corporation works in regards to self-employment. Obviously, we're talking about trade or businesses, not talking about rental properties. We're talking about active things, right? You're trading, you're a consultant, you're a realtor, you're trading your dollars or your hours rather for dollars. It would be a Schedule C filer if it wasn't a corporate entity. The earnings are subject to Social Security and Medicare. That's the people we're talking about here. We're not selling stocks. That's capital gains, right? We're not doing rental properties or multifamily stuff or any of the partnership things. That's a whole nother passive category too. We're looking at active trade or businesses, things we materially participate in. So that's the general theme. Well, the S Corporation. Really probably the greatest operating entity, in my opinion, mainly because you get to save some money. You can save some taxes. So let's say, for example, you're a realtor and you notice that you're doing pretty darn good as a realtor, and you look at it and you go, it's feast or famine in the real estate world. 1 month you're doing 5 closings, and then the next 3 months you don't have any, and then you'll do 10 closings, and so on and so forth. So there's a lot of risk, in any sort of business when you go off on your own. And the whole concept of an S corporation, when Congress enacted it, well before I was, even thought about it being on this planet, the concept is that when you own a business like an S corporation, you are in essence working for that business, but you also own the business, so we're looking for some sort of return on our investment. And that's a very important concept, is return on investment, because just like if you went out and bought Apple stock and you bought it for $100, you sold it for $200, well, that $100 gain in that example is a return on your investment. Well, when you have a return on your investment, normal tax code is not going to make that return subject to Social Security and Medicare tax. Social Security and Medicare is a 15.3% tax. If you're a W-2, right, you pay half, employer pays half. If you're self-employed, you pay both sides. So you need to kind of understand that that's a big theme when it comes to the S corporation. So what's the benefit? Well, the benefit is exactly there. Tax code states that the profit or loss, typically we're talking about profits, hopefully not losses, but the profit of an S corporation is not subject to the 15.3% Social Security and Medicare tax. That's a big deal. So I'll have people come in and they'll go, well, I made $100,000 last year as a realtor. So you're telling me I can do some paperwork, complicate some things, become an S corporation and save 15.3% on $100,000? No, doesn't work that way. Conceptually, we like that kind of concept, but unfortunately, it's not that pure, okay? While yes, the profit is not subject to it, the tax law states, this is super important for S corps out there, the number one thing you have to do, you must have a reasonable salary. And that reasonable salary is based upon what you do, right? So a beautiful website to look at is the Bureau of Labor and Statistics. In your geographic location and in your industry, you can see a range of what somebody in your field would actually get paid on a W-2. Well, that's a beautiful thing to use for a reasonable salary for your business. So let's go back to a realtor. Let's say the Bureau of Labor Statistics says realtors make anywhere from $30,000 to $80,000, right? They give a nice range. I'm in Minneapolis, so let's say it's Minneapolis. Well, okay. Maybe we start somewhere in the middle. Maybe we go, you know what, let's do a 50,000. We don't know what we're really gonna do, but 50,000 is a pretty reasonable salary for a beginning business. I don't care who you are, okay? So from that standpoint, all right, let's go back to that previous example. Realtor makes $100,000, right? They're gonna pay the full 15.3% if they're not a corporate entity, they're filing a Schedule C. We do a conversion and they're now an S corporation, and we have a reasonable salary of about $50,000. Well, that $50,000 comes off of the 100 in my example, but then you are left still with another $50,000. That other $50,000 is your return on investment. That return on investment for the risk of going out and starting something on your own, taking the onus, that is a return that's not subject to Social Security and Medicare. That's that 15.3% tax. $50,000, well, 15.3, roughly $7,500 in taxes that you can save by making yourself over into this area. But you got to be careful, right? There's two different things. I've sat in front of IRS agents and I brought this up. This is what they call the ace in the hole, the reasonable comp audit. Are we paying ourselves enough? Because of course, somebody that understands this is going to try to make their W-2 small so that they can save more of the 15.3%. Of course, it's human nature, right? We want to try to save as much as we can. Tax law says it needs to be reasonable. So let's be reasonable with it under two different concerns. I have two different things that I'm concerned about. A, what do we do? What is our job? What are we doing? If I got an S corporation and the person's a surgeon, I'm sorry, a surgeon doesn't make $50,000 a year. It doesn't work that way. They come in, I look at it, I go, a doctor, $100,000 to $200,000 on a W-2. I'm going to take them probably all the way to the FICA limit, right? FICA limit roughly 147,000 as time of the recording of this video. So yeah, you're going to pay the full Social Security portion. So our savings is minimized there because we're only going to save on the Medicare side for being in that S corporation. Still could be very, very good because who knows how big the profit is for that person. But so you got to be pretty careful about what you're actually doing for the reasonable comp. Part two, and it does matter because I have seen this in audits and I've talked with auditors at the IRS, is we do need to look at the level of distributions that need to come into play. Distributions are really that other money, right? So in that example, I used $100,000, $50,000 wage, and there's $50,000 left over. You would actually do a distribution to yourself of that $50,000. Well, let's say, for example, you're a consultant, right? And a consultant, I mean, the range is very wide on consultants on the Bureau of Labor and Statistics, but let's say the consultant in this geographic area makes 80 grand, okay? And so your consultant, reasonable comp is 80,000. Well, you're killing it. You're making a ton of money. And let's say at the end of this, even after you've paid yourself this $80,000 salary, you're still left with $500,000 of profits. And you're like, sweet, I can take distributions of $500,000. I'm going to save myself the FICA tax on that $500,000. Well, in theory, that is correct. But there is part two of reasonable comp, and that is going to look at what the actual distributions are for that industry as well, how skewed they might be. So in that example of someone that might distribute $50,000 or $500,000, they're under risk that the reasonable comp is not high enough, even though the Bureau of Labor Statistics says they're right inside that range. We may have to bring them up and get them closer to at least to that FICA limit where they stop paying Social Security and they can save that Medicare. It's still a great savings. 3% on hundreds of thousands of dollars is still very, very good, but you just need to be cautious with it. So the S corporation, the take back on this is it's the best operating entity for operational trader business income when it comes to taxation savings. It's a very old entity. It's backed up by a lot of tax law that's been around for a very long time. It's very, very good for you. It's very, very good for the overall tax picture in your life. Remember, you got to have reasonable comp. That's super important in this scenario. It's really the main key to the whole S Corp game. But you're going to save yourself potentially 15.3% on a decent amount of money for being that entity. So happy hunting, and you go ahead and look for your S Corps. All right, have a good one.